we're going to check in on the oil price because Brent crude prices edged lower overnight as Hurricane Isaac was downgraded to a tropical storm, and damage to oil facilities on the US Gulf Coast looked to be limited. But the oil price could be under further pressure as the White House considers releasing additional reserves from its stockpiles to dampen the recent rally. For more, Larry Shover from SFG Alternatives joins us at the CME in Chicago. Larry, I guess if I can first off ask, do you think that this is a realistic prospect? The White House has said it's still on the table.
Oh, it's absolutely on the table, and I think that's one of the reasons why oil was down over 1% today. I mean, we're in an election year. Oil is starting to creep up towards that $100 a barrel mark, the mark where we start to see demand destruction in the U.S. Obama really wants to win. I do believe that oil reserves is definitely on the table, releasing that. But also, let's keep in mind that the oil inventories came out a lot higher than expected. The hurricane got downgraded. So all those things together caused oil to go down more than 1% today.
So this would largely be a political move.
Am I exaggerating the political move? I mean, I'm not exaggerating it because I do believe that oil needs to be lower. I mean, Obama would probably use that as something to help himself get elected. And if oil continues to creep higher for whatever reason, I think that's something that he'll resort to. But keep in mind, that has backfired the last two times he's used those reserves.
So you think we'll see this before the U.S. election?
I do. I mean, if oil, let me rephrase that, if oil continues to climb towards $100 a barrel, I do believe we'll see the oil reserves being unloaded into the market, hoping that at the end of the day, oil prices will go lower. But again, like I said before, that has backfired two times in a row.
OK, should we see it? I should ask next. You think we will see it, but should we see it? Is this just a political move, or do you think it's necessary?
No, it's not necessary at all right now. I mean, I think it's free markets for free men and free women, and I don't think politics have anything to do with it. I mean, we have a lot of oil that is untapped in the United States that we could take advantage of. We have pipelines that we could create more jobs through Canada, through the United States. It's completely political right now.
I did also hear a trader this morning saying that they've got to keep this SPR release under the cap because it is the only thing that's keeping oil prices lower, or a cap on oil price, the expectation that this might come out. And once it does, who knows where the oil price will end up.
Yeah, and that's a great point. But the fact is they're over the mandate right now. And I personally don't see that going lower because they need to keep over the mandate because to stay within the EPA specifications. So that, I mean, could change very quickly. But we only have 70 days till the election. So something would have to change awfully quick. And I can't imagine that getting pushed through our Congress and our Senate within 70 days.
OK, Larry, should also get your, I guess, preview or take on Jackson Hole coming up this Friday. I just spoke about the markets being in wait-and-see mode ahead of this, but realistically, are you expecting anything?
You know what? The only thing I'm expecting right now is perhaps an extension of the ZIRP pledge, ZIRP pledge, maybe out to 2015. I mean, it would be a complete outlier for anything else. I mean, asset purchases right now would be very hazy. Given the decent numbers we've seen as of late, even today our GDP was revised upward by 0.2%. Our housing number climbed up a little bit. We had a decent earnings season. I think the market is focusing away to the fact that maybe the Fed meeting on Jackson Hole on Friday doesn't carry as much weight as it did a couple months ago. People are lowering their expectations, looking more towards what's going to happen in Europe next week and less what's going to happen this Friday in Wyoming.
Yeah, absolutely. I mean, when will we start this whole, I guess, scenario where investors view good data as bad and bad as good because they're cheering on a third round of quantitative easing? When are we going to see an end to that? And when are we going to see the market wholeheartedly cheering on good, strong economic data in the States?
Yeah, you know, I love the way you put that. You're preaching to the choir because, You know, in the past, economic rallies, whether it be the stock market, what have you, have all been predicated on the fact that, hey, the private economy is going to work on its own, things are getting better. But lately, everything's been, well, we have stimulus around the corner, so therefore we should rally. I think we're going to have a sustainable rally when the truth comes that the Fed no longer will do anything to stimulate the market because they cannot do anything to stimulate the market. And until that happens, unless that happens, we're not going to see any kind of sustainable market in the market whatsoever.
Absolutely. Okay, you're more so looking forward to Europe then and the ECB meetings we're likely to see there if we're not going to see anything from the Fed. We have one on September 6th, but then we have this German vote on the ESM, which is on September 12th. Do you think we're likely to see anything before the German vote, or will it have to come afterwards?
You know, it's probably going to come afterwards because there's so many moving parts that are involved. I mean, I have to say, Draghi's done a great job. It's been a brilliant piece of work that he's written. Just yesterday, he wrote a piece about how to keep all this together. But there's so many moving parts when you think of the convertible risk and the conditions and the accountability and what duration are they going to buy, and is the S&P going to be unlimited or limited what they're going to do? Is there going to be a pre-announcement? I mean, unless there's something coming out of the woodwork that I'm not aware of, I think it's going to have to wait till later. But I think what Draghi could do, especially on the 6th, is just have a roadmap in place. This is where we're going, and this is how we're going to do it. And I think that will stabilize all the markets.
You said Draghi's done a great job. What has he done a great job in? So far, it seems to have been mostly jawboning.
Yeah, you know what? I should rephrase that. His rhetoric has been great. It's been brilliant. And just the markets, you know, by and large, have embraced his rhetoric. So there must be something behind that. And there must be something behind the seat cushions that we're not aware of, because his rhetoric has been brilliant. And the fact is, the stock markets around the world have responded, and sovereign yields in the periphery have gone lower. So there has to be something to that. But as we get closer to the date, I think people are going to drill down on the specifics and say, wow, there's a lot of moving parts to this. What is he going to be able to deliver?
Absolutely. And what if you had to, I know there are just so many options on the table, but if you were a betting man, what would you say we're likely to see?
Wow, that's a tough one, but I think it's going to be, he's going to just put out a plan for convertible risk. I mean, that's something that most people don't think about, but really we have to worry about. Are we subject in Europe to be buying a bond issued by one country that might be converted into a denomination of a currency that's outside the Eurozone? I mean, that could happen. And then also, seniority. I mean, what happens with this debt that's going to get spread out amongst Europe? Who has seniority, and how much is the ECB going to be involved? That's something that I would bet on, but that's something I think we'll see next week.
So many questions, Larry. We're lucky to have you on board to give us some of the answers, or at least explain them to us. Thanks for your time.